Yeah.
Yes.
Well, welcome to Etchin Life. We're not in Vancouver anymore. We are in Calgary. And today we have Mark Kent, CEO of Portfolio Strategies, appearing at Etchin Channel. And Mark, it's good for you to have you appear at Etchin Life.
Thank you.
Now, a lot of people from Hong Kong know about stock trading. They got introduced about different discount brokers, so to speak. And then people like trading in general, people from Asia. But when we talk about portfolio strategies, and I know that's the name of your firm, that's maybe a totally different animal. And some people talk about whether all-weather strategies exist, whether the so-called the underlying assets, can you extract alpha in up markets, downward markets, or sideways markets? But maybe, go back to the question, does an all-weather portfolio exist?
Well, we really work for the long term. We're, strategic asset allocation for many of us. And we think that the value add really is with the financial planning, tax, retirement, estate planning components, more so than strict investment returns. So we're generally looking to manage money through a market cycle. So that would be 6-7 years or longer. We don't tend to deal with a lot of clients' play money, if I can call it that. So we deal with the core net worth. We may end up dealing with perhaps 90% of their investable assets. So maybe they retain 10% for play money to trade, as you've touched on already. So we're investing to meet long-term goals, not really very short-term goals. So it's a very different focus than, I guess, a traditional, brokerage account where you're trading in and out constantly. That's not what we do here.
So you're not looking into some sort of a black swan event, putting all the money into buying an out of the money call or put, expecting something like a casino type of return. That's for gambling, of course.
Right.
Yeah.
No, we don't do that at all. We're looking at mainstream mutual funds. We're 99% mutual funds, 1% private equity, private debt. But the vast majority of our clients, we have about 40,000 clients, manage 4.2 billion in assets. They're primarily in managed mutual funds, so they're very well diversified amongst each mutual fund.
How many clients across Canada do you have?
About 40,000.
40,000, mostly in Vancouver, is it?
We're primarily British Columbia and Alberta, but we're in all the major cities. So we've got Saskatoon, Regina, Winnipeg, Toronto. And we're also registered in Quebec, Nova Scotia, and Northwest Territories. But I would say probably 80% of our assets are in British Columbia and Alberta.
80%, okay. So Winnipeg is still an untapped territory, Regina as well, if people want to move there. I know some immigrants are actually moving from Hong Kong into PVI. Of course, it's not the most favorite place. And also Winnipeg, you just alluded to earlier, because of the lower cost place to live. But Vancouver, definitely, with skiing, and then you can go fishing in the afternoon as well, all in one day.
Yeah, we have quite a large presence in Vancouver and the Lower Mainland. We probably have 100 advisors. 35-40% of our advisors, they're all independent, they're Asian descent, primarily in the Lower Mainland. We have some in Toronto, Calgary, Edmonton. So we're spread out across Western Canada primarily.
The IAs, investment advisors.
Yes.
Did you say 10% are Asian descent?
It's almost 40%.
40%
of our advisors. We have about 275 independent advisors.
275. Are they mostly, now you mentioned they're mostly into mutual funds. I remember when I was back in Canada, back in the late 90s, lots of people are into trading, even if you work for one of the investment firms, bank-owned investment firms, because that was the dot-com era. People like to get in and out, and then they make some good money until year 2000, when the internet bubble burst, things kind of turned around. And then people experienced Lehman fiasco in 2008. And you were mentioning portfolio strategies. Do you believe there's every 7 year there's a cycle? Now in the Bible, they talk about the Joseph cycle, 7 years of good harvest, 7 years of drought. Is that what that is? The cycle. What is the cycle?
Well, a business cycle, I guess we're thinking it's going to average about 7 years. So the black swan event that you refer to, the last 20 years, there's been a relatively quick recovery from the black swan event. So, we had the COVID correction last March. It was recovered in a matter of a few months. We're way up from a year ago. So the clients that stuck with their long-term plan have done very well. Generally, those that are working with a financial advisor. Clients that trade personally, some of them, panicked. They thought, okay, the market's down 30%. What if it goes down another 30%? So they basically sold their positions, locked in their losses, and now they almost have to double their money to get back to where they were before. But if they'd actually stuck with the portfolio, they'd be much better off today than they were, if they cashed out April of 2020.
Okay.
So we don't really do stocks here, publicly traded securities here. So we're a mutual fund dealer, so we're limited to mutual funds, but we also do private equity and private debt. That's a small part of our business.
1%.
1 or 2%.
Okay. Tell us a little bit more about your firm now. If you talk about independent financial advisors, back in the 90s, people heard of some names like AIC, for instance, Michael Lee Chin, for instance. So happened my last name is also Chin, but no relationship. And I'm not from Jamaica. People heard of Fortune. I don't know whether they still are active or not. Maybe not. I left.
I think they were absorbed by another firm.
Right. Can you tell us something about portfolio strategies? At first, I thought that's part of the CFA curriculum, portfolio strategies. And of course it is. But tell us something more about PortStrat. What is it?
Well, we started as kind of a low-cost service provider type model. We deal with entrepreneurs. We do not really bring in, if I could say, raw rookies to the industry that need a lot of training and hand-holding. So we tend to attract more experienced advisors that want to build their own practice. In fact, a lot of our Asian advisors, did move to Canada, and they were well educated, and many of them spoke the Queen's English, if I can say that, but they couldn't necessarily work in Canada in their chosen field from back home. So a lot of them became investment advisors and financial planners and worked, within the Asian community. We do have quite a few clients that are overseas. So we do have clients in Hong Kong and mainland China still, business people that are moving back and forth, which I think you've alluded to.
Yes.
But we do. I think our value add is really in the financial planning and the retirement planning focus, as I said. So we kind of look at the core financial assets and try to invest it maybe a bit more conservatively for the long term, because people want to preserve their wealth generally, and not everybody's willing to put it into real estate and hang on for the long haul. So some people want some liquidity. That answers your question.
Yes. When did you start portfolio strategy?
November 14th, 1994. So it's 26 years. It'll be 27 years in a couple months here.
Okay. Were you financial planner or a stockbroker before that?
I was primarily always a financial planner. I took all the securities courses in the early 80s. I traded stocks and bonds since I was about 18 years old in Vancouver.
Okay.
And I realized I didn't want to be tied to a desk trading. So I liked the financial planning aspect where you're meeting with a lot of clients, face to face, and working on solving their long-term goals and dreams, etc. So that's kind of where I decided to shift. So I've been in the business for 36 years right now, and
including you working for another firm from before.
So I worked with a couple of other mutual fund dealers, and then a small number of the financial advisors got together and said, Mark, we are a very financial planning oriented philosophy. And a lot of the firms out there were not really financial planning oriented. They were more transaction oriented. So that's when we decided to create Portfolio Strategies Corporation. So it started with perhaps half a dozen key advisors, and now we're up to 275 advisors. And some of the advisors are still with us, are still with me in one firm or another for 35 years.
That's a lot. Yeah. Long time. How about British Columbia? How many advisors are there in BC? Vancouver?
I would say probably about 100.
Okay. Richmond?
That would probably account for 70 of them.
Wow.
70 out of 100. So
okay.
I'm from Vancouver originally, so we've always had a very strong position in British Columbia. We're the largest mutual fund dealer west of Ontario, and we're definitely the only dealer of any size in the prairie provinces.
People usually ask this when they put money into a fund, see how secure it is. Now in Hong Kong, for instance, if you invest into, let's say, a hedge fund that is unauthorized, you will have a fund administrator. So you could directly invest into the fund, and then the person could be an accredited investor without going into, let's say, a bank, let's say whether it be a private bank or a premier banking client. How safe is the assets of an individual in Canada? Let's assume I want to invest through portfolio strategies. Let's say if I want to invest in one of the underlying mutual funds, I don't know whether, for instance, AIC still exists or Trimark. I haven't been to Canada for a long time. So it's my asset placed in an escrow inside one of these mutual funds, or does portfolio strategy have a big escrow account and then you allocate to these different funds?
Well, I'd say 80% of our client assets are in what's called a client name registration. So it means it'd be directly in your name, Ed Chin, with Fidelity or Templeton or CI. And they're usually set up as mutual fund trusts.
Right.
They're audited regularly. Some are corporate class offerings, so they can give you some capital gains and dividend tax treatment instead of interest, obviously. And so you could even have bond or balance funds generating interest income, but they might be taxed as capital gains or dividends from the corporate class structure.
Right.
So these are all publicly traded securities. So you're dealing with, banks and utilities and technology companies, the largest companies in the world. So I'd say there's almost no chance that they're ever going to, go to zero. So I'd consider them to be extremely safe.
So you don't keep the money inside portfolio strategies, right? That goes wired directly into the mutual fund house.
Well, it's paid to us in a trust, and then we have to remit to all the different mutual funds.
Okay, so you have a trust account to do it.
Yeah.
Okay.
So we're an audited trust account. You may decide you want to deal with 4 different mutual fund companies. So you'd write us a check for $250,000, and then we have to settle up with all the mutual fund companies in 2 or 3 days.
Got it. And as I alluded to earlier, I haven't been back, honestly, for a long time, 21 years. I do come back for visits, but usually just a very short stay. If people redeem their mutual funds in Canada, is it like a 1-day notice, or is it like a 1-month notice, or it depends on the fund?
Well, mutual fund trades will settle in what's called T+2. So in basically 2 days, your trade is executed. If it's in a registered plan and there's some additional tax reporting, that might take an extra day. But if you have a money market fund or a high interest account, you generally can get your money redeemed within 24 hours. And it'll be within your account that day or the next day.
Meaning,
so it's very quick.
Let's say if I use an advisor at the portfolio strategies, the value of the fund goes up and I decide to sell parts of it. I notify my IA and then he will help me sell the fund, and then in T+2, right? I will get the money back and then instruct him to wire the money to my bank account, for instance.
Correct. When we do redemptions, we're asking for your banking information so we can send it to you by electronic funds transfer. So it's quite quick. So generally, you'd get your money in 2 or 3 days.
In the 90s, people used something called like a DSC, deferred sales charge. Is it still common in Canada?
It's diminished quite a bit. I
Yeah,
think it's about 6% of our sales
yeah.
last year were in deferred sales charge funds. So rather than pay a commission up front, you would have 100 cents on the dollar invested day one.
Mm,
And if you decide to take your money out in 5, 6, 7 years, then you'd pay a deferred sales charge. So it'd be on a sliding scale, it might be 5.5% the first year and declines to zero after maybe 6 years. So it's a lot less common. We've moved to more of a fee-based model. So a lot of our accounts now are in, it's called nominee. So it's in our dealer name and trust for clients. And then we put a fee on it. So we're getting the best professionally managed mutual funds that we can find, to suit your goals.
I see.
And then we charge a fee, which is allocated monthly. So there's no deferred sales charge. In fact, deferred sales charge funds will be eliminated from Canada in June of next year.
What would be like a fee-based account percentage-wise? Would it be like way up, or is it like 1%, or depends on the size?
Yeah, it's a sliding scale. So our minimum fee is 0.5% because, we have to audit and
Yes,
move
of course.
money. And, we don't think our financial advisors should work for free. So we have a minimum of 0.5%.
Yeah.
If it's a large account, it could be less than that. And I think the highest is 1.5%. So if it's a smaller account, maybe it's, locked in money and there's a lot of financial and retirement tax planning involved. And there may be up to a 1.5% fee on this account, and it might be very little on a different account. So if you have a locked-in pension transfer, for example, that you can't touch for 20 years, some clients may put a higher fee on that because they can't redeem it anyways.
Right.
And then a non-registered account, which they may have to access on a regular basis, they'll put a very low fee on that.
Okay.
So it might average out at 80 to 100 basis points.
For your firm, since 80% of the IAs are in BC. If I didn't hear it incorrectly, a lot of people have this so-called are in a transition period. They might not be a tax resident of Canada yet, but they might be moving back in a year or two. Do you, or does your firm have specialists advising them on tax issues? Because that's the most important thing if people do relocate back to Canada. Let's say they have been working overseas for X number of years, and then whatever that's gained in Saudi Arabia, I don't know, Taiwan, Hong Kong, they have a one-time free, right, when they move the assets back. Any advice from your firm that can do that?
Well, Portfolio Strategies does not provide that service, but we have a number of the main mutual fund companies that will do that. So they'll have tax and estate planning departments. So if you're repatriating money from, UK pensions or the US from an IRA or a Roth, then the fund companies are already set up to kind of walk you through that and let you know what paperwork is required. But we don't have our own in-house staff that do that because it's available for free with the fund companies.
Of course, they are very big, and they can do that. I guess, Mark, one last thing I want to ask you is, what's the advantage of using an independent financial advisor like Portfolio Strategy versus something like a broker-dealer that has stocks, bonds, and also mutual funds advice through a bank? There must be some difference.
Yes, well, I think the main the main issue is we don't really have the conflicts of interest. So we don't have proprietary funds that we need to sell here. We don't have our own mutual fund families. So in my mind, we select what we think is the best solution for our clients. Well, we don't do stocks. We do government bonds. We don't do corporate bonds. But if you look at the banks primarily, they're almost exclusively selling their own mutual funds. So they may not be the best or necessarily above average in given categories. But because they've got their branch network and tens of thousands of employees that can only sell that bank's products, then they're just clearly not going to be as diversified as we are as an independent dealer. So we're really focusing on the long-term relationship with the client. We're not paid to sell one fund company over another. They all pay us the same way, so we don't really have those conflicts of interest. So that's part of the main advantage that we're working on accomplishing long-term goals, doing the financial planning component, the investments, and I don't mean to belittle the investment component, but through a market cycle, whether you've got brand A's global equity fund or brand B's global equity fund, they tend to be relatively similar over the long term in performance. Some will be hedged, some will be unhedged based on currency. But that's a decision that the advisor and the client will make, whether they want to be hedged or not. And some of our Asian clients, they want all their investments in US dollars. So we accommodate that. We have a lot of US dollar mutual funds. So if they don't want to deal with foreign exchange risk of Canadian dollar versus US dollar, they can hold everything in US dollars if they prefer.
Yeah. Well, if portfolio strategies want to expand into the UK in the future, definitely I think that's another big market. But I think Canada is big enough since there are lots of people relocating back these days, which is unprecedented. And thank you so much for your time. And I hope if I do come by to Calgary next time, I can ask you more about what is a real, whether there's so-called weatherproof portfolio strategy. I set the topic as such with a question mark because it is not easy to answer.
Oh, well, some clients want a lot more risk than others, and so we have to take the risk level down to whatever the client's comfortable with. And an example I've used many years ago was when Ross Perot ran for the U.S. presidency. If you remember him, he was a multi-billionaire, and he was interviewed, and they said, well, we couldn't help notice that all of your money is in U.S. Treasury bonds. And he looked at the reporter and he said, well, I thought I could live on $40 million a year. So if you get 4% on $1 billion, you don't need to try and make 8, 10, 12% and take unnecessary risk. So that's kind of our philosophy generally.
Lower or acceptable return, but lower volatility.
Correct.
Yeah. And thank you so much again.
Okay, thank you.